Before we get into it, nothing here is financial advice, just my opinion. This is the company that controls surgery's future. More than 3 million robotic procedures a year, zero debt, 84% recurring revenue, 11,000 systems installed in hospitals worldwide. So why is the market giving ISRG a price that assumes perfection? Let's open the filings and find out. Intuitive Surgical makes the Da Vinci surgical robot. 11,000 systems worldwide, 3 million plus procedures a year, 17,000 employees. If you have had robotic surgery, it was almost certainly on a Da Vinci. But the machine is not the business. The razor blades are. Every procedure consumes instruments and accessories, and that is where the money really comes from. This is the monthly chart for ISRG. From the 52-week high at 600,388, the stock now trades at 345.42, down 42.8% from the peak. The trend is bear locked. Price is testing the 52-week low right now, and the support at 345 is the last line of defense. If that level breaks, the next leg lower opens. The pivot to watch is 400. Reclaiming that gives the bulls a chance. Below it, the bears are in full control. The momentum reading is bearish, oversold, but no sign of a divergence yet. The fresh catalyst is already behind us. Second quarter earnings landed July 16th. Revenue of $2.89 billion, up 19%. GAAP earnings per share of $2.29. The installed base crossed 11,700 systems. The next date on the calendar is third quarter earnings around October 20th. Between now and then, this chart is the battleground between a great business and a demanding price, and the levels above tell you where that fight gets decided. $10.6 billion in trailing revenue, growing 21%. $3.2 billion in operating income, almost $3 billion in net income, and after stock-based compensation, $2 billion in owner earnings. That is real cash after the cost of keeping the engineers who build the robots. This is a business that prints money. The question is what you are paying for the printer. Zero debt, $8 billion in cash and investments, and it grew again in the June quarter to $8.6 billion. $3.4 billion returned through buybacks over the last 12 months. No interest payments, no maturities, no refinancing risk. In a world where capital got expensive, this balance sheet is a weapon. The fortress is real. 66% gross margin, 30% operating margin. These are software-grade numbers on a hardware business. Gross margin did compress 150 basis points in fiscal 2025, but that was mostly mix as new Da Vinci 5 systems ramped. The latest quarter actually turned back up. The real asterisk is stock comp, $800 million a year, a quarter of every operating dollar. Follow the cash, $3.4 billion in buybacks over the last 12 months, and they leaned in during the drawdown. Stock comp is only 24 cents of every buyback dollar, so the share count is genuinely shrinking. No dividend, no debt paydown needed, no empire building. 84% recurring revenue funds all of it. This is disciplined capital allocation. The latter, fixed multiples of owner earnings, never discounted cash flow. 15 times plus net cash, bear case 106. 20 times base 135. 30 times bull 191. The stock trades at 345, above even the bull case. That needs owner earnings compounding at 11% for a decade. If this research has saved you even 1 hour of digging, a like tells me to keep doing this. The bull case in 3 moves. 1, the toll road mode. 84% recurring revenue, 11,000 systems, and surgeons who trained for years on this platform. Switching costs are enormous. 2, the Da Vinci 5 upgrade cycle. 870 placements last year, up 140%. 3, the cash machine. $8 billion net cash, zero debt, and buybacks accelerating. The bear case in 3 moves. 1, competition is finally here. Medtronic Hugo is FDA cleared and launching in the US right now. J&J Ottava is coming behind it. 2, the valuation. Everyone already knows this business is good, and the price reflects it. Any stumble risks a 30% drawdown. 3, procedure dependency. A macro slowdown hits surgeries, hits instruments, hits everything. Dollars inflate, gold does not. So every episode, we run the ounce test. Take the share price of $345, divide by gold at 4,018, and 1 share of ISRG costs 0.086 ounces of gold. At the January 2025 peak, you paid 0.22 ounces. Measured in gold, the price has been cut by more than half. We check this again in January 2027. Valuation, watch. Premium on a known great business. Balance sheet, pass. Zero debt, $8 billion in cash. Margin trend, watch. Compression with system mix, and the latest quarters turn back up. Revenue growth, pass. 21%, well above threshold. Smart money, pass. Buybacks at 4 times stock comp. Risk, fail. Competition is real. Verdict, watch. A beautiful business at a complicated price. I show you the data. You make the call. So where does that leave us? Intuitive Surgical is a beautiful business at a complicated price. If the multiple comes down through earnings growth or a pullback, it gets interesting. The next look is third quarter earnings in October. Watch procedure growth against guidance and watch the Hugo launch. Every episode, one stock, one honest scorecard. We show you the math, you make the call.